That is wonderful. Wow. Michael says, what are some of the careers in the industry that we don't usually think of?
Okay, great question. Okay, so I would start off largely, the industry largely breaks down to what we call the buy side, sell side, and regulatory. Buy side basically are the same as what you would call the clients, Fidelity, Vanguard, your mutual fund. So any mutual fund out there. So whether the pension funds or you with your own retirement funds, when they want to invest your money that they're managing for you, let's say Fidelity, they as the client will go and call the investment banks, a Goldman Sachs, a JP Morgan, a Morgan Stanley, a trader like myself, my old job. They'll say, hey, we love Tesla. Please buy us 10 million shares. Those banks, the investment banks, are what's called the sell side. But before I go there, the buy side, again, that's clients. Those are the asset managers, the mutual funds, the hedge funds you might have heard of, private equity, venture capital, which the 10K project at some point, once you get past angel, friends and family, you start to rub against that venture community where they're competing now. Once the deals you guys have funded have gotten to a certain size, next thing you know, the white boys want their piece, sorry. That's all the buy side, the guys with the money who actually invest. The sell side are the investment banks that cater to them, that actually, Robinhood just went public. Generally, that's changing a bit now, but generally they will hire what's called a lead underwriter, which will be an investment bank, again, Goldman Sachs, JP Morgan, Morgan Stanley, that says we will bring this private company public by selling X number of shares of this company to the public, so that now you are a public company that anyone can invest in and list on a stock exchange. Those firms are the sell side. And within the sell side is where a lot of these roles are interesting. You have risk management, compliance. Are you compliant with laws? Are you compliant with regulatories? Are you compliant with different internal lines within the business? Risk, compliance, sales and trading. That person that Fidelity calls and say, here, buy me 10 million shares. That's either another salesperson who says, okay, I've got that order. I will now, thank you for the order. I will now give it to my trader who's watching the markets every day and knows the best time to buy or sell. He'll put down the phone. He'll talk to his trader, buy me 10 million shares of Tesla. He will now go to the market and say, okay, I've been watching this stock. I know that every Thursday around 10 a.m., some big seller comes in. He pushes the price down. If Fidelity wants these shares today, it's probably the best timing. And that's what a trader does. He's watching all these names. He knows what his clients, what they like, what they want to buy and sell. He might hear of a stock, let's call it anything you want, Amazon. He'll have to remember, he's got a big buyer of Amazon who's been looking to buy a large piece of stock, 50 million shares or some crazy number. Somebody might call him and say, hey, I know someone who's selling a lot of Amazon stock in one big piece. Everyone likes that because you can move chunks of companies in one trade. And that's that activity between the salesman and the trader and how they're interacting between, again, that buy side, Fidelity, who's investing your 401k, your pension, he's calling over to the bank, and that's how that happened. Those trades match. When that trade gets done, the guy says, done, hang up the phone. Then it goes with something called settlement, which is the operations parts of the business where, unfortunately, most black and brown people are. That's just what it is. It takes time for those trades to settle. Hey, you have to make sure the money gets funded, blah, 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 blah. So the large divisions are compliance, risk, sales and trading, M&A, we call that corporate finance, the guy that actually won the deal from Tesla. When they were a private company, says, I will bring you public. That's all the M&A guys, corporate finance that are going out, knocking on doors on companies all day, say, hey, how about going public? We'll make you rich. The analysts, a big part of that community. The analysts are the ones that are writing the buy and sell recommendations for these stocks all day long, telling the community what they think about these different names. You should buy, you should sell, profit target here. And that is the large portion of the investment banking community, compliance, risk, sales and trading, corporate finance, M&A. analyst. That's a large portion of it. Let's see, regulatory. That's the SEC. You know, it was mentioned earlier, the Jobs Act, which legalized crowdfunding, falls under jurisdiction of the SEC. The Securities Exchange Commission, formed in 1933, if I'm not mistaken. That's regulatory, to keep all these crazy guys and their crazy animal spirits in check, because we know capitalism, if it's unchecked, it turns into something that's just not healthy for society. So there are laws around what can and cannot be done. You know, we had the '08 crisis because there was over leverage in the system, et cetera. We have laws that try to keep these things in check and balance. And largely, that's the investment banking, the traditional Wall Street landscape in a broad stroke. It's changing now. Obviously, crypto economics is changing. Now you have the introduction of the crypto economy. But for the most part, that's a traditional Wall Street in a mouthful.